Hello guys, welcome to the Solid as a Stock session. We will be covering stocks today. We've got the disclaimers in the top left hand corner, so please do read them even if you need to pause the video to do so. Now, just to show you different places you can go for support, so that if you have any questions, of course, you know where to go, and if you're looking for anything in particular, hopefully you'll find what you need from what I'm about to show you. So different email addresses, becky@tradewithufos.com and support@tradewithufos.com. So that's there. You can also go to tradewithufos.com/Becky. So that will take you to this place here. Now, from this link or from this page, you can book one-on-one coaching. You can get apps, courses, coaching. You can come down here and we'll be filling this in today. We'll be able to track what our trades are doing. These are actually for options, so perhaps not today, but we will be tracking our trades in this area as well, and you can follow that. If you scroll down a little bit further, you will see that there is a question and answer section here as well. So different resources, different areas of support, and the same place to get it, which is tradewithufos.com/Becky. So let's now, as we're looking at stocks, let's now look at some trades that we placed last time, some trades that we still had open, so that we can keep track of what's going on and keep track of what we're doing. Did we win? Did we lose? Did we not? What's happening? So first one we have here is the last one that we put on last time, VSH, Vishay Intertechnology. Looks like that. Now with this one, or with all of them, I'm going to go through trades that we've placed already. And if you've joined us in sessions before, then that helps to put context to what you've already seen and track how we did things. For those of you where this might be the first stocks video you've ever watched, you might want to skip past this to look for the new opportunities, but I would encourage against it. And the reason for that is that this is where I'm going to show you how we might manage trades. Why would we cancel trades? Why would we get out of them when we're in them? Why would we close early? Why would we not get into them in the first place? How would we trail our stops? Trade management is what we show in looking at trades that we've already done. So that's helpful to learn, even if this is the first session you've come to. Okay, so with this particular trade, we placed it on the 22nd of April, and we would have, by the looks of it, let's have a look. We would have cancelled the trade. Yeah, that was the 25th. Yes, we would have cancelled the trade by the time it entered. Now, the reason for that, if I just go back here. So the trade entered on the 28th of April. In fact, no, we would have, apologies there, it was only just in. So on the 28th of April, we would have entered this trade. Probably we'll have an example another time and I'll explain to you what I was about to say, but I'll leave it for now. So we would have actually entered this trade. So in which case, what happened with this trade is we entered on the 28th of April as the markets closed. Then by the next day, by the end of that next day, we would have hit our first target. That's a 50% profit, or we would have made half of our trade. And then it went against us and stopped us out the next week. And we took a loss there. So we made half of the trade and then we lost half of the trade, break even. We didn't win, we didn't lose. It was a break even trade. That's why we put that target there. Ideally, we want to take our trades to our final target and get all of that profit. If we're not that right though, if price isn't going to go all the way there, we want to protect ourselves against the loss by having a close target, a one-to-one target, which means in the case of being a little bit right, but not right enough, we break even, we don't lose. And that's what happened here. It was a break even trade. Write that in my notes as well. Okay, so let's get rid of that one. Then we had INTC, Intel. Here we go. So this one here, we placed it on the 22nd of April. So it was placed at this point. As we can see, price never came back to it. It's now too far away. The EMA is now not lining up. By the time price got back up here anyway, it would likely change the climate. If you don't know what I mean, we'll get to that when we place new trades. If you do know what I mean, then you know what I mean. Basically, the parameters that we would need in order to enter this trade would no longer line up by the time price got to it. So we would cancel this trade. It's not a trade that we would end up in. FNKO. So essentially, whatever strategy you use, if you are using particular parameters or particular rules in order to get into a trade, if the circumstances of the market changes and therefore those rules are no longer being met, cancel the trade. For us, we have a rule that says we need, if we're going to go short, let me just do it over here. If we're going to go short, we need to have a thick blue dot. Sorry, if we're going to go short, it's a thick red dot on our auto climate. If we go long, then it's a thick blue dot. So if we're going short, which is what this trade was, we need to have a thick red dot on our auto climate. We also need to have a UFO, and we'll show you those in a minute, a UFO, a sell UFO on our smaller time frame that lines up with the EMA price on the bigger time frame. Those are our three main rules. We have other rules as well, but those are the three main things that need to be here. So if by the time the trade enters, this is no longer a thick red dot, which it looks like it wasn't in this case, we cancel the trade. If by the time the trade enters, the EMA price wasn't enveloped by that UFO anymore, wasn't in between these two lines, then we would cancel the trade. So in this case, let's have a look, replay it and see exactly what happened. So on the day it triggered, on the 2nd of May, it's hard to figure out here. Depends how vigilant you were that day. On the 2nd of May, looks like the 2nd of May. Oh no, sorry, 2nd, 3rd, 4th of May. On the 4th of May, which is when this trade triggered, we had a thin dot on auto climate, meaning it's no longer a thick red dot. Thin tells us not enough probability either way. So if you were watching it that morning and you saw the auto climate change, you would have cancelled the trade and therefore not got into it by the end of the day on the 4th, which was the day that it triggered. It was the end of the day. It was around 6:30-ish p.m. my time, so round about now, I guess, round about now kind of time in the States. That's when it triggered. So halfway through the trading day. Now, if halfway through the trading day or before that, you'd have looked and seen that the climate was no longer what it needed to be, you would have cancelled the trade and therefore not been triggered into it. Now, the reality is you may not have been looking. So maybe you looked here and you realised that the auto climate was not what it should be. And so you actually got out of a trade you were already in for a slight profit. Maybe you looked here and you realised that you were in a trade you shouldn't have been because the climate was different and you got out of the trade at a slight loss. Maybe you didn't look at it at all, in which case this trade went against you and you lost. So it depends how vigilant you are in looking at this. We obviously recommend that we are vigilant and that we manage our trades and that we get out of them if we're no longer meeting the rules that dictate whether or not we get into a trade. So technically with this trade, if you had been vigilant, you would have been out of it. You wouldn't have been triggered into it. Realistically, depends on whether or not you are checking in every morning as to whether or not you may have been caught on maybe luckily at a slight profit or unluckily at a loss with this trade. Overall, should have been a cancelled trade. Okay. Then we have ELY. Look. So this one looks like it would have been an out-and-out loss, but let's have a quick look. It was a 2-day chart on the right-hand side. That will help. Okay, so it appears, yes, it stopped out just here, which is really unfortunate. So let me show you. So we placed the trade on the 22nd of April. By the time it triggered, we had a thick red dot. The EMA was where it should be. So we were in the trade. We had no reason to cancel it. We were in the trade. Price moved in our favor a tiny, tiny bit. Didn't quite hit our safety target. and then went and stopped us out to the cent, to the 1 cent. Our stop loss was 24.39. Price reached 24.39. So we would have been stopped out of this trade. And then unfortunately, it's gone back in our favor. Now, that's rare, very rare that happens. The fact that it's hit our stop loss exactly, the fact that it moved in our favor but didn't quite hit our safety target, and that everything was still aligned when we took the trade. It's unlikely that those things combine. It's unfortunate when it does happen, but this would have ended up being a loss with this trade. So we've got those 4 that we placed last time. Let's have a look at some other open trades that we have from previous trades. So we have VIAV. So we are open in this trade, no reason to change it. We've got a thick red dot and continuing thick red dots telling us probability is down. At the time when the trade triggered, the EMA was where it needs to be. The EMA being where it needs to be, meaning between our entry and stop loss, that's only relevant before the trade triggers or when the trade triggers. After the trade triggers, of course, the EMA is going to move away from us, we hope, because price is moving in our favor. If price is moving in our favor, the EMA is going to move with it. So the EMA needing to be where it needs to be is only relevant just before entry or the exact entry into our trade. Hopefully, let's squish this right down. Hopefully, we plan on it continuing the whole way down. Unlikely that it's going to reach all the way here. That's a good 10-to-1 trade. But more than likely, let's say price continues down for a little bit and then starts to change direction. When it changes direction, we'll have thick red dot, starts to change direction, maybe a thin dot, and then thick blue dot, thick blue dot. At the moment in time, let's use a different color. At the moment in time where we no longer have a thick red dot, we get out of the trade and we take the profit that we have. Like I said, it may be that this continues to the downside for a long time. We keep having thick red dots and we get it all the way to our second target. Unlikely. If not, we will be cancelling out of this and taking our profit, whatever it is, whenever we see a change in the climate. So we're keeping this one in for now. Now we also have MITK. Same situation. No, actually, we've taken a full profit on this one. There we go. That hit our second target. We placed this on the 11th of February, so it's been in for a good few weeks now, a couple of months. Hit our first target reasonably quickly, bounced around a little bit, but we still had thick red dots. Our EMA was where it needed to be when we entered. We then have had thick red dots, probability downwards as price has moved in our favor. And it looks like, so when was this? 28th of April. So that was just after, about a week after our last session, we hit our second target. Happy days, full profit on that one. Now, of course, you could be, rather than taking your second profit, you could be trailing your stop loss and locking in profits along the way. But if you followed it as it was shown, then we would have taken profit exactly here. Great. Now let's look at, I think we have 2 more that are still open before we move on to new opportunities. Okay. EPBI. This one was a wide risk, so it was a wide target as well, but we've hit our safety target already, so we are safe now. Worst that happens, price moves against us, we don't have time to do anything and get out of it, and we break even in this trade. Worst that happens. If price moves against us, it's likely that the climate will change, and then we'll get out of it and maybe take a little bit of profit. So we'll have made 50% profit and then made 20% profit of whatever our risk was. So make a little bit of profit. Obviously, hopefully, price continues and hits our second target. Nothing to do with this for now, but to let it play out, check in on it, manage it if it needs managing. But for now, it doesn't need managing. For now, we are at a break-even minimum. And then the last one, PRMW. And I believe that's the last one. It is. It's the last one. Okay. Okay, so PRMW. Same situation. We hit our safety target reasonably early on. So this was weeks ago. We placed it in February. We hit our safety target in February. We've bounced around. I wouldn't be surprised to see the climate change soon, but for the time being, it's still a thick red dot. We still have probability down, in which case we leave it. If price moves and the climate changes, we take early profit on the second half of the trade. If price gaps and ends up stopping us out, we break even on the trade. If price continues in our favor, and hopefully it continues all the way down there and we take a full profit, but we will see with this one. So those are trades that we've placed before, different ways to manage them depending on whether or not it was before the trade was entered into, whether or not the climate changes, whether or not the EMA is lining up in different scenarios. So hopefully, whether you have joined us before or not, even though you might not have watched us place those trades at the time, it makes sense as to why we do what we do and how you might manage trades of your own as well. Okay, so we are going to be looking at some new opportunities now. Before we do that, let's have a look at our weekly economic calendar to be aware of news that might affect us coming up. So today's already happened, so great. This is in GMT, so this is actually an hour behind my time right now. So it's 12:30 Eastern time. So 12:30 Eastern time. Hold on, so that's 4 hours behind. So that came out 8:30 Eastern time. Currently 12:30 Eastern time. So this has already come out. So here on Wednesday, the 11th of May, again, this will be 8:30 Eastern time, 12:30 GMT, 1:30 p.m. In the UK, so on, depending on where you are. 8:30 a.m. Eastern, we have some news coming out on Wednesday that could affect the US markets. So be aware of that. We're looking at US stocks, so we need to be aware of that. And then on Friday the 13th, hopefully not an unlucky day, we would have news coming out at what would be 10 a.m. Eastern time that again could affect the US markets. So we need to be aware of that as traders. Now, coming to look at some new opportunities, let's come to our Predictive Options Planner, which is, or commonly known as TOP. It is our platform that has all of our apps integrated. Now I'm going to look at the S&P 500. I'm actually going to look at the ES, which is the continuous futures contract for it. Basically, I'm looking at a representation of the top 500 US stocks because I want to know what the general mood is at the moment. Now, if you've been following stocks, we all know what the general mood is, but let's have a look at it statistically. So, not surprising to see, recent move to the downside. As we see here, by the way, with our UFOs, price started to move down a good while ago. This was earlier part of the year. It moved back up, hit sellers, is what we had here, and moved down again. That's why we want to know where buyers and sellers are, because they give us a decent indication of where price might change direction. And that's obviously something that's helpful to know as a trader or investor. So price has been moving down. Therefore, we have a thick red dot probability to the downside on the market as a whole. That means we're going to be looking for individual stocks that also have probability to the downside. Now, could you have an individual stock that is doing well and has probability up? Yeah. And it's fine to do that. If you find those opportunities and it has those statistical probabilities, go for it. But what we don't want to do is have, well, we can do it. But if the whole market is coming down and we take that one stock that has slight probability upwards, the whole market might drag it down. So we can just align things a little bit more in our favor to be looking for individual stocks that also have probability down, as the market as a whole will probably be dragging them down as well. So we'll look for that. I'm going to use a scanner in a second, I'll show you it, that will help us to find these stocks. We don't have a set watch list of particular stocks. You might, if you're looking for stocks that have well-paying dividends or certain price points, or maybe you just have stocks that you like to follow, that's absolutely fine. We try and be more objective rather than subjective, meaning we want to look for any stocks that meet certain statistical criteria, whatever they are, whatever we know about the company. In fact, the less we know about the company, the better in some ways, because it saves that subjective thoughts, that subjective bias, and we're simply looking at the stats. We're simply looking at what is objectively more or less likely to happen. So we'll be looking at that in a minute. we are going to have a weekly chart on the left-hand side. We're doing that because, in my opinion, swing trading or short-term swing trading stocks is not the best thing to do. We should either be in and out of stocks within the day or be in them slightly longer term for a few weeks to a few months. Now, the reason for that is because there are gaps in the stock market nearly every day. And so if our trades are being held over a couple of days, normally means our risk isn't wide enough to take those gaps. If we plan for our trades to last a few days to a few weeks to a few months, our risk is generally wider. That doesn't mean we're risking more in terms of actual money, but we are risking more between our entry and stop. Our risk is wider, giving us more room to be able to take those gaps as price moves generally in one direction or another. So either day trade or longer term swing, position trade or invest would be my personal opinion on this. So that said, we're using a weekly chart on the left-hand side. On the right-hand side, we are going to be looking at a range of timeframes. We're going to look at the 144-minute, the 1 day, the 2 day, and the 3 day chart. Why? Because on the right-hand side, we need this to be essentially a smaller time frame than the left-hand side, because the right-hand side is what's going to help us be more specific about our entry and stop. We don't want it to be so wide as big as a weekly chart, but nor do we want it to be on a 1 minute chart or a 5 minute chart or a 30-minute chart and be tiny, and again, not give us that room to take the gaps. So we're looking at a smaller time frame between a reasonable range. You could look at timeframes in between these if you want to. These are just the 4 that I use. So we'll be looking at different timeframes, cycling through them to find opportunities as they come up. So let's have a look at our matrix, which is our scanner, essentially. We've got a minimum price of $15. You could change that. That's what we use. Minimum average volume of 300,000. Again, you could change that. That's what we use. We're looking at all US stocks and ETFs. Now, we are first going to make sure that we are excluding stocks that have earnings coming out within the next 5 days. Why? Earnings tend to create volatility, could go in our favor, could go against us, who knows? Volatility is often risky, so we'll just avoid trades that in the next 5 days have earnings. Now, if we're in a trade for a couple of weeks and it's been going in our favor for a couple of weeks, again, we've got more room to take the hit if the volatility goes against us. We've only just got into the trade and it's very close to our entry. We have less room to take that hit if volatility goes against us, hence why it's 5 days. Then with AutoClimate, we are looking at a weekly confirmed down sensible AutoClimate, meaning we want thick red dots on a weekly chart. We want probability down on a weekly chart. That's what we're looking for. It's near the 9 EMA. That's what this means. The 9 EMA is the blue line, or in this case, the purple line that we're seeing, that we want to coincide with our auto UFOs. So if price is really far from that, it's unlikely we're going to place the trade. So this is just helping filter down a little bit further to have us look at trades that make more sense to look at. But with all that being said, we will click scan. Just take a sip of water. And we have, what's that, 15-ish trades to look at, or 15-ish stocks to look at. I'm going to do it alphabetically just because, and we'll go through one by one, looking at different timeframes, finding opportunities. So AKR, Acadia Realty Trust. So first and foremost, we will not be doing anything further with this stock, and I'll tell you why. We have a thick red dot, probability down, yes. However, we also have buyers here. We are within a big stack of buyers. So what we have right now are sellers pushing down and buyers pushing up, same place. Who's going to win? Who knows? But there is not enough probability on either side because we've got two competing forces. Ideally, we want those two forces going in the same direction with each other, adding to our probabilities. Going against each other takes away from our probabilities, so there's no point trading it. So first one, striked off. Stricken off? Stroke off? we have striked it off. Anyway, ATVI, Activision Blizzard. Okay, thick red dot, probability down, quite a long way to go before we hit buyers, so that's a good thing. So we've got probability down at the moment, and the EMA price is 78.29. So we want to find now on the right-hand side, red UFOs that coincide. We've got the numbers here that it correlates to, that coincide with that number, 78.29. Unfortunately, 78.29, as we can see there, is of course going to be below where this UFO starts. And although the EMA moves with price, so if price moves up, so does the EMA, not sure it's going to move as far as we need it to. So let's look at a different time frame. Now with this one, these UFOs are closer to us. So again, the EMA is 79.29. So it's closer to here. Price needs to go up 40 cents-ish to get to where we are now, or to get to that UFO. And therefore the EMA only needs to go up 10 cents-ish. So it's more likely that that does happen. So let's bear that in mind, but let's have a look at different time frames to see if there's anything closer. There isn't. So we will take this time frame, the daily chart of ATVI, and we'll place that trade. Now, because these two UFOs are very close together, we will group them. So with that, today is the 6th. I'm going to make a note on my own log here rather than the one on the tradewithufos.com/Becky one, only because I wasn't quite sure with that. It said options at the bottom, so I don't want to overwrite anything that's, maybe I'm looking in the wrong place. So rather not do it wrong, I'll keep a note for myself, and by the next time we'll make sure that we do it in that public space. So we are looking at ATVI. We are 1 week on the left, 1 day on the right, going short. Our entry will be 79.41, which is the lower number of the closer UFO. Our stop loss, we're going to take the higher number of the further UFO, so 81.13, and we're going to add 10 cents, so 81.23. Our target 1 we'll figure out in a minute. Our target 2 is going to be 60.01. Why? Because that's the first hint of buyers that we have on a bigger time frame. So we'll figure out our target 1 and place this trade. Let's have a look. ATVI. Here we go. Okay. So I'm going to use Fibonacci tools here, not for any other reason than drawing. So apologies to those of you that use it for what it's intended to be used for. I use it for drawing purposes. That helps me see what I'm doing. Okay, so that's my entry and that's my stop. Therefore, let's take that off and put order panel in. Therefore, our target 1 is always 1 to 1 away. So we figure out what our risk is in terms of cents. Start to finish, it's 182 cents or $1.82 if you were to trade 1 share. I always risk $50 on each half of the trade, just as an example, which actually rounds this down to 27 shares per half of the trade, so 54 in total. If we're risking 182 cents between entry and stop, then our first target is 182 cents between entry and target. So that means, close but no siggy, 77.59 is going to be our target 1. Brilliant. Okay, we already know where our target 2 is, which we got from top, which is 60.01. There we go. Oh, it would be great if we reached all the way down there. I doubt it, but let's see. So that's the first half of the trade in. Second half, same entry, same stop, same risk. Our profit target, though, will simply be 60.01. We click sell. So there we go. So those are, or that is our first trade. I'm going to put a little note on here. We placed 6th of May and it was 1 week and 1 day. There we go. So that is our first trade of the day. Let's go back to top and see what more we can find. CB. So thick red dot, probability down. We don't have buyers on the bigger time frame for quite a while, so that's good. Now let's have a look and see if we can find sellers. Now the EMA price is 208.63. So that's what we'll look for. So just above current price, basically. So we want sellers just above current price, and we don't have them. So we move on. If that was quick, if you're watching recorded, hopefully you can pause and see what I mean. We were looking for red UFOs just above current price. They weren't there, so I moved on to the next time frame and then eventually gave up with that market. We are now looking at Dominion Energy, thick red dot, probability down. We've got room to take it to the closest stack of buyers, quite a way away. Our EMA price is 83.76. So we are going to look for stacks of sellers, red UFOs, around that price. And we do not have any nearby, so no trade. Okay, it's very mechanical. It either hits the rules, it either does what it does, or it doesn't. Now, depending on the size of the red UFO, we may still take this, but let me explain what I mean. Thick red dot, probability down, and current price is here at 28.88. Our EMA is here at 29.19. Our first stack of buyers is here, 28.37. So we want to find red UFOs around this pink line. Depending on how big they are, we might not have enough room to take it to here as a profit, but we'll have to see and look at what we have in front of us. May not have any, no, we don't have any red UFOs around there anyway, so no problem. Next one, Federal Signal. Just check, by the way, those that are watching live, if you have any questions or you want me to look at any particular stocks, just let me know in the chat box and I'm happy to do it. Okay, 34.46 is our EMA, thick red dot, so probability there to the downside. Room to take it to the buyers, they don't start until 30.09. Also looks like we have a lot of UFOs stacked on top of each other here, but maybe not close enough to where we want them to be. There's none there where we want them to be, none there, and unfortunately none there either, so no trade on this one. We've traded this stock a few times, I believe. Gilead, 61.16. So we already see that we have an opportunity here on this time frame. So let me just squish this. Thick red dot, probability down. We have quite a way to go before we hit buyers, so room to take profit here. The EMA is at 61.15, which is here-ish, which falls nicely inside this red UFO on a 144-minute chart. Now I'm going to look through other time frames, see if we have a better opportunity. If we do, I will explain why. Okay, so we don't have one there on the daily anyway. None on the 2-day, none on the 3-day. So we'll take it to the 144 and we will place this trade. Okay. So it is GILD, 1 week and a 144-minute chart. Going short, the entry is 60.72, so the lower number of those two here. Our stop loss will take 62.38, add 10 cents, makes it 62.48. We'll find out our first target in a minute once we do the maths on it, but our target 2 is going to be 46.37, which is the higher of these two numbers. So that's the trade. Let's now go back to TradingView and have a look. Again, I'm going to use Fibonacci tools as they were not intended to be used. So 60.72 is the entry. Now, yeah, current price is just below us, so that's fine. And 62.48 is the stop. Brilliant. Okay. So if our entry is 60.72 and our stop loss is 62.48, then our target one will need to be 58.96. So it's the same risk again, just projected to the profit side. Okay, so we're going to risk $50 as well. And I do $50 on each just because it's an easy example to use. You risk whatever you want to risk. It's ultimately up to you. Of course, you don't even need to place the trade at all if it doesn't fit your rules or you don't want to. All of this is just meant to be an example of how you could do it, of what might make sense, and explaining how we do things. It's ultimately then, like I said, up to you to decide, does it fit your rules and is it something you want to do? Okay, so the second half of the trade is in. It's quite a way away, so we've got a lot of room to take it if it does go in our favour. But there we go. It placed on 6th of May, 1 week and 144. Looks like we've just been triggered in that. So we are now simply waiting to see whether or not this trade loses or wins or breaks even or some form of management in between, and to what level that makes a difference to the results. So we'll see. So that was the second trade of the day. Let's now look at Hewlett-Packard. So thick red dot, probability down. 16 is our EMA. We don't have buyers down until 13.60. We already have on the 144, we already have a UFO. We won't actually take it on the 144, and I'll explain why in a minute. So we'll look to see if we have a better opportunity on a different time frame. Unfortunately not. Okay, so this is where it comes down to personal preference to a degree, and more how conservative or how risky you are as a trader. How many layers of probability do you want to add that have to be met before you place a trade? Or would you rather have less layers of probability and place more trades? Now, it's not that one or the other makes you or loses you more money, ultimately, in terms of your monthly or yearly statement. You could take, let's try and do easy maths on this. You could take 100 trades that each make you $10 and you've made $1,000. Or you could take 10 trades that make you $100 and still make $1,000. So it's not that if you're placing more probability layers in and therefore maybe you make more money per trade and you're taking less of them, that you end up making more money. You could take more trades that have less value or less probability and still make the same amount of money. That's why it comes down to personal preference. Depends how active you want to be, depends how patient or impatient you are, depends on whether or not you'd be more annoyed to see a good opportunity go by because you had rules in place that stopped you from taking it, or whether you'd be more annoyed to take a trade that didn't hit everything that ends up losing. Up to you to decide how you feel about that. Now, for us, the rule is this number needs to be more than 50%. That's very close. It's 49.19, but it is not 50%. Rules are rules. If you're going to bend them and say, oh, it's close enough, how far do you do that? Then you've got to have a cutoff there. And then how far do you push that? So 50% is the rule for us. For you, it might be 40%, might be 30%, might be 90%. You barely place any trades then. It might be 10%, it might be 60%. It's going to depend on what you want. That number represents essentially how often the UFOs work. And work is defined by how many times does price go between the sellers to the buyers to the sellers to the buyers. Essentially, how many times do those UFOs work to push price at least as far to the next opposite stack of buyers or sellers? So you could have buyers or sellers that are 10 to 1 away, and therefore a 50% chance of hitting them at 10 to 1 away is huge. You'd make a lot of money doing that. you could have buyers and sellers that overlap each other, and you've got a 50% chance that price barely makes you anything. So it's not, again, it's not necessarily reflective of how much money you make, but the lower that number, the less likely it is that our UFO works out, and therefore the less we want to place the trade. So for us, that minimum number needs to be 50%, 50. So we cannot place that trade, however close we are to a potential trade being able to work out. Okay, Jabil, maybe. So this one we will see. We will see what happens because we have a thick red dot, probability down. We have sellers close by that have recently, price came in and was pushed down. Price came in and was pushed down. Price came in and was pushed down recently. We also have buyers. Price went in and was pushed up. 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 We've got buyers and sellers kind of corralling price right now. Price is bouncing between them, and therefore current price is relatively close to buyers. We may not want to sell, but it will depend on how big or how wide our risk is. So we'll see. Now our EMA price is essentially at current price, isn't it? So let's have a look for any red UFOs that are at current price. Okay, unfortunately, because I have to really squidge this to see it, the EMA is 58.85. So yeah, it's far enough away there. Not lining up, no trade. Probably a good thing anyway, because like I said, price is just bouncing between buyers and sellers at the moment, and buyers were close by. If we're selling, we don't want buyers close by. They threaten our trade. So PDCO, Patterson Companies, thick red dot, probability down. EMA at 32, and no buyers for a while until 28.89. So we want to find red UFOs at 32.13. So let's have a look. They're not on the 3-day, not on the 2-day. Wouldn't line up for the 1-day, but are very likely to line up on the 144. I'm just going to wait for this to load, because at the moment it's only loaded some of the data, which means this number up here is not accurate just yet. So we're going to let it load, which it has. That number has changed. It's still above 50%, so let's go for it. So 32.17 is going to be the entry. We're looking at PDCO, 1 week on the left and 144 again on the right. 32.17 is the entry. Now you might think 32.17, but the EMA is 32.14. It is now just gone to 32.14. As price moves up, so too will the EMA. Price is currently 18 cents away from our entry price. The EMA is currently 3 cents away from our entry price. So if price moves up by 18 cents, it's likely that the EMA also will move up by at least 3 cents in order to coincide in that place. So it's kind of preemptive looking at these things lining up. We've got a high probability that we're right here. So our stop loss is going to be 32.78. So it's taken that bigger number and adding 10 cents. 28.89 is going to be our final target, which is this one here. And we'll go and figure out our target one now. So we are looking at PDCO. Always pops up to save information on this, which is of course pointless because it depends on what stock you're looking at, but hey. So the entry is 32.17. The stop loss is 32.78. Looking at a 144-minute chart. Our final target is 28.89. Let's have a look at what our first target will be, our safety target. 32.17. Stop loss 32.78. Risk $50 for me, you pick what you want. Stop loss is going to be, target one is going to be 31.56, and we've already got our second target in there. There we go. So that's in, and let's put the second half in. There we go. 28.89. There we are. Brilliant. So placed 6th of May, 1 week and 144 minute. Brilliant. So that's the third trade of the day. Let's now look for another one if we can find one. Always do our best to find as many as we can before the close of the session. So that was PDCO. Let's have a look at ROL, roll-ins. Okay, so here, I mean, if we could take it from 33 something down to 17 something, that would be a pretty decent profit. But let's have a look. Thick red dot, probability down. We have our EMA is at 33.77, so basically 6 cents above current price. So we don't have any red UFOs there on this time frame. Let's have a look at the 1 day, the 2 day, and the 3 day. Nothing there either. Move on. RPM. Current price is at the EMA right now. Thick red dot, probability down. Current price is at the EMA, and we've got quite a bit of room to take it to our stack of buyers, which are at 71.12. So we want a red UFO at the current price. Oh, let's have a look. Okay, so the EMA is 84.32, which is just inside this red UFO. However, I was getting excited then. However, our probability rating is less than what our rule is. Again, your rule might be less. Our rule is 50%. So unfortunately, although that literally just worked out by a fraction of a cent, we cannot place that trade, unfortunately. Let's have a look at this. Starwood. So thick red dot, probability down. EMA is at 23.74. Buyers are down at 15.13. So 23.74, just above current price, we want to find red UFOs. We don't find them. We move on. So last but not least, so 19.20 is our EMA. Thick red dot, probability down. We have buyers, do we? No, we have no buyers below us. What that means, if there's no buyers below us, then we will trail our stop loss for the second half of the trade. So we lock in profit as we go based on different rules, and we'll get to that if we place a trade. So I'll show you. Okay, so we want a red UFO around 19.20. So nothing there, nothing there, nothing there. Okay, so let's wait for this to load because that's dead on 50%. So let's wait for the rest of the data to load, and then we'll see if this is the one that we want to use. It's lining up, but it may not. I'm not sure if you saw that. As the rest of the data loaded, it went from 50% to 47.37. So not enough. Again, we don't bend the rules because it's close. Otherwise, when do you stop bending them? You've got to have a hard rule then to say, I'll only bend it by this much, and then that might as well be your rule, if that makes sense. So no trades that we can look at now to the downside. We still have 10 minutes. So I'll tell you what we'll do. Let's look for individual stocks that may have confirmed probability upwards. Now, they are not going to coincide or correlate with the market as a whole, but as an individual stock, it's going to have things going in its favor to the upside. So we'll see if that's worth doing. So we have a thick blue dot, probability upwards. Our EMA is 129.80, so 129.8. It looks like we have no sellers above us. So again, we trail our stop if we are correct and see what happens. So we want a UFO that is at 129.8. Let's have a look. No. So again, all I'm doing is looking at these numbers to see, do we have a UFO that is around 129.8 or above it? It's not, so moving on. Okay, so here we have these buyers push price up, price then started to move down, created some sellers, price came back up, hit the sellers and were pushed down. Sellers push price down, buyers push price up. That's why we want to know where they are. What we're in a situation in at the moment is that we are close to sellers. So far, we've been looking at going short and we've been wary of buyers. We're now looking at going long and therefore we need to be wary of sellers. We've got sellers close by. We may still have room to take profit, but we'll see. The EMA is 111.54. So let's have a look for UFOs that may be around that area. No UFOs around that area. In fact, there's sellers there. That's not what we want. Okay, so thick blue dot, probability up. Sellers nowhere in sight. So we trail our stop loss if we're right. We want a UFO around 52.63. And we've got UFOs that are close, but not close enough. Nothing there. So absolutely last but not least, then the absolute last stock we'll look at today. WY. Again, we've got sellers close by, so we need to be aware of that. Those sellers start at 41.19. Our EMA is 39.95. Again, we have a situation here where buyers push price up, hit sellers, push price down, hit buyers, push price up. Again, we want to know where they are because it helps us figure out what we're doing. So we want a green UFO, those are the buyers, that match up with 39.95. Let's take a look. Nothing. So no trade to be taken there anyway. So we've now looked through a list of stocks that had probability down. We looked at those first because the market as a whole is coming down and therefore we have correlation on our side. Once we exhausted that list and we placed 3 trades today, 3 trades. Once we've exhausted that list and we placed 3 trades, we then wanted to look for individual stocks that may have probability to the upside. We know we don't have correlation on our side. That's a nice additional, but it's not a have to. It's not a rule in the same way that auto climate is a rule, that auto UFOs are a rule, this number here is a rule, and the EMA is a rule. If we have correlation as well, great. If we don't, no problem. So we placed ATVI, we placed a short on a 1 day on the right hand side. So we placed a short here. So we will see at the moment price is close to the EMA. As price moves up, the EMA will also likely move up and coincide at our entry price for ATVI. But we'll see. We want to track this. If by the time price comes to enter, it has to cross the EMA to get there, cancel the trade. If the EMA moves with it and coincides and enters that UFO as price enters the UFO, brilliant, place the trades. You need to track it a little bit more tightly. Then we have GILD. Again, we looked at a short. In this case, we were looking at a 144 minute. We had a thick red dot, room to take it to the closest buyers. Our EMA was 61.19, which is where we were at here. So we placed that trade. It was actually before it entered. We're now in that trade, so we'll see what happens. And PDCO was the last one that we looked at. Last trade that we placed. Again, thick red dot, probability down, room to get to the buyers. Our EMA was 32.15. That is just underneath this red UFO. As price continues to move, so too will the EMA and very, very likely coincide in this area here. They've worked before already. Price came up before a few days ago, hit the sellers and was pushed down. Price comes up again and hits the sellers. We would expect them to push price down as well. We will see. If you have any questions, the best place to come is to tradewithufos.com/Becky. From here, you can book coaching with me directly if you'd like. You can get general coaching, courses, apps. We will start to fill this out, but I'll make sure that I'm doing it in the right place. And down here, we've got answers and questions and answers, not answers and questions, where you can ask a question if you'd like, or you may find the answer to your question that somebody else has asked. So I will love you and leave you. Today is Friday, so I wish you guys a great end to your trading week, a great weekend ahead, and I will see you again soon. Take care. Bye-bye.